Ladies and gents, today we are seeing some Moon Platoon crazy shenanigans. This is a line right up here. The yellow line I'm about to draw is 161.8% Fibonacci retracement from January's squeeze. We passed 100% 2036 earlier in the pre-market, and we have just been non-stop grinding ever since. This is, yes, you are looking at a $9 difference in 1 day's worth of price action, much of which was $7 from $22 to $29 within an hour and a half, roughly 90 minutes of price action, which means people are already starting to talk about the fact that this is the squeeze, that you are going to be a fool to keep holding, you're going to be a bag holder. Listen carefully. We never give you financial advice on this show, but you have to understand that people are going to be adjusting their narrative to try and get you out of your position and to FOMO for you, right? To FOMO in the opposite direction because they are FOMOing for the position that you are currently holding. So those of you that have positions in AMC and GME, I'm going to explain hopefully a couple of the factors why GME is currently stalling, AMC is soaring, and what this consolidation right here, this dip down $3 from dropping us from 50% up all the way down to 35%, so a 15% dip is actually the best thing that has ever happened today. But before that, if this video does not yet have 1,300 likes, I think you know what to do. Comment out which like you are in the description so that we can get this message out to as many apes as physically possible. On AMC's side, you'll notice that this has almost no elements of an Elliott wave that we have seen with constructive technical analysis on AMC's recent past. This means that this has just been trending right above the simple moving average almost the entire day. Essentially, the bulls and the apes leading each other up higher and higher and never ever crossing underneath that simple moving average. This was a panic-inducing trend for me because, as you may know, if we don't have the bears and the bulls understanding each other, reaching a mutual consensus that there has to be levels of resistance and support, two of which I just added, run at 2178 and one at 23-ish, right? These were levels that AMC were having trouble passing and yet getting supported by. Support turns into resistance and vice versa in recent price markets. This is just how the market works out here. She has Jalil. There are people going crazy right now, and that's the calm techno analysis that you guys are looking for. So
the committee will come to order.
One of the only important things that I do want to be able to provide you guys in terms of this article is that the short interests are different, right? According to Ortex Analytics, short interest in GameStop stock fell off Thursday morning, while short interest in AMC was up slightly. All right, the data reinforces the theory. The thesis widely held by the retail crowd that short sellers are still a major factor in their trade, even after January's manic squeeze caused panic and pain for hedge funds betting against both stocks. And this is just truth, right? This is we don't have to actually understand the validity of whether or not short interests are actually rising up or down. Remember the beginning of the story, we always had to check in bi-weekly onto the FINRA report to see the source of truth here. Ortex scans 85% of the market, gives us a great glimpse into what short interest that we're currently dealing with. A small margin, 1% or so up on AMC side, and an even smaller margin down on GME side. However, what the article fails to say is that GME is actually up to 20%, right? That's healthy. We have seen it dip below 19, and yet now over the last few days, it has been up on the 20% versus a 3% lower amount for AMC. Now that said, their floats are completely different. The kinds of companies that they are completely different, but Bala Margulies, all men must die, but all shorts must cover. So what this article is trying to elicit is the delta that has been recently changed. However, it's important to not miss out on the fact that GME is still in an excellent squeeze position, and if AMC does get to squeeze-worthy levels, at the very least gamma squeeze-worthy levels, then we can see a lot of people transitioning their energy into GameStop once the mother of all short squeezes for AMC is complete. And I've always said, or vice versa. Don't change your meme horses yet. Right? It doesn't make sense, and you'll be hurting the apes that have been supporting you for the longest time. I can't give you financial advice, but that is what I am going to do. Hedgie's Real Talk Time Reddit user peaked in the 80s posted, the first one of you to cover your shorts might be able to scrape together enough shares to make it out alive. The later ones are effed. That's the idea that margin calls is going to be the last site that a hedge fund gets to see. We saw some margin calls 2 weeks ago when Adam Aaron announced the at the market $500 million worth of AMC extra liquidity, but also the fact that they survived it without much of any price dilution at all. And the most important piece of that is the fact that so much of this gamma is now starting to accumulate for AMC. We look at the options chain all the time on AMC's side, right? It's just a normal day with some battlegrounds at $20 and even more at $30, right? The puts currently have the calls, but with a small margin and only for today's amount of options. What should be even more important is the total number of calls expiring in the money tomorrow, May 28th, right? With even 40,000 more in the making. So if you guys understand that data, that the fact that we have not seen this much gamma in our favor already in the money, this is why we are going to see gamma squeezing first, margin calls second, that mixed squeeze leading us to the mother of all short squeezes, which could be easily as early as tomorrow or the week after that, right? But the squeeze has not started. Don't let anyone tell you that now is the peak of the price action. One of the other things that you do have to understand is that when you are taking a look at that market and preventing yourself from falling into the pits of January squeeze, make sure that you have multiple access points to the market and multiple ways, multiple opinions to tell you when a squeeze will happen or when a squeeze is not yet finished. And that's why I really suggest, if you guys haven't gotten your 2 free stocks on Webull, that is an opportunity you can get without having to do anything. Don't even have to transfer your stocks into Webull, or you could if you wanted to. Definitely do if you have Robinhood, but that gives you another access point into the markets for more security if one of your brokers restricts your access to the market. And another way to be able to get a second opinion is with cheat code algorithm, something that we have been looking at for GME. The cheat code is able to cache this early morning dip from the 4 out of 4 sell signal, 1, 2, 3, 4 here. And so you would have been able to catch that on the hourly, and for AMC, you would have been able to catch the buy signal here, right? Even though it's far out of the Bollinger of being overbought, cheat code was still right in that you had a 2 out of 4 buy signal here. If you caught that, you would have been able to catch that crazy $18 to $29 rip. So once again, thanks to those of you who make this show possible. We're going to keep going on this live stream, but if you know that data never sleeps, so turn on your bells. Even if you are already subscribed, and if you haven't yet, well, get on up to 90,000 subscribers and we have a major swag giveaway. So thank you guys, and we'll see you in the money.